Hello, and welcome to this Master Series special event, What to Know About Setting Up and Operating a Loan Out in Canada. My name is Sarah Westman-Liu, and I'm the Manager of Business and Product Development here at Entertainment Partners. And I'm joined today by my colleague, Jennifer Licio, VP of Tax Incentives and Business Affairs. And together, we'll be discussing what is required to work through a corporation on productions in Canada. So in Canada, we have a very vibrant film and television production industry, which actually creates over 200,000 jobs each year. And one of the interesting and unique opportunities that exist for production workers in Canada is that instead of being engaged directly as an employee, they can choose to be engaged through a corporation that they own, which is commonly referred to as a loan out company. And many people are already working through loan out companies, but for anyone who may just be considering setting one up, there are some important steps that need to be completed right at the outset to ensure that the company is set up properly and that it has complied with all requirements. So to kick things off, Jennifer, could you describe for us the steps involved in setting up an incorporation?
Sure, of course, Sarah. There's two main steps to setting up a new company. The first step is to file your articles of incorporation, and these are typically filed in the province where your company or you are located. And at this point, you'll just need to provide some very basic information like the address and the name of the director or directors of your new company. And at the end of this usually online filing process, you'll have your completed set of articles and certificate of incorporation. These are important documents because before you can be paid through this new loan out company, you'll need to provide a copy of these articles and certificate to the production's payroll department to confirm that your loan out is now active.
Okay, so it sounds like you have your corporation set up now. So what's the
Right.
second step?
So the second step is then to prepare the company's formation documents, also sometimes referred to as your minute book documents. So these include things like the corporate bylaws, shareholder and director resolutions, or meeting minutes. And most importantly, for tax credit purposes and payroll purposes, a share register showing who owns the loan out corporation. So every company has at least one shareholder. And since the articles or certificate of incorporation don't contain that information, this is why the company's formation or minute book documents become important to have on hand. The most important of these is, of course, the share register. So because shareholder information is so important to both tax credit calculations and payroll processing, a share register, which is basically like a small chart, like the one you see up here on the screen, and it just lists the shareholders of the corporation, how many shares they own, and the value of those shares. So this would be the second document that productions are going to require you to provide in order to be paid through your loan out once you've now set up your new loan out company.
Okay,
Okay.
so we can see that the shareholder register looks like a pretty basic document, but I understand that the province of British Columbia has some specific requirements with respect to this document. Can you explain that?
Yes. So actually, in British Columbia, there's a special rule where the share register needs to be in a particular format called a central securities register. So unlike other provinces where a share register can be in any format you want, as long as it has the relevant information, BC has a specific document, and those requirements are laid out in the BC Corporations Act. So in BC, the central securities register is the one single document that's used to confirm a loan out's share ownership. And we're noticing that auditors are asking and productions are asking for this BC Central Securities Register instead of some other share ownership documents that we'll get into later on when we talk about the tax documents loan outs provide.
Yeah, that's great information. Thanks, Jennifer. So now let's assume the corporation is all set up and all of the documents have been prepared. Let's move on to the topic of tax filing requirements for corporations. So I know that as individuals, when we talk about filing our taxes, we always refer to the tax year, which is also the calendar year. But with corporations, it's different. We refer to the fiscal year. So could you explain that?
Sure. Yeah. So, like you said, a corporation has a fiscal year end, and this can be set at any date at any time during the year, which is different from a personal tax year end, which is always December 31st of every calendar year. But usually, the date that a company sets its fiscal year end tends to be on the last day of the month. So, just like a person, an individual, a company has to file a tax return every year. And when it files that tax return will depend on whatever corporate fiscal year end date it chooses. So when a new company is set up, it has to file its very first corporate tax return within 53 weeks from the first date that it was set up or incorporated. This means that a company can operate for about an entire year before its first tax return is due to be filed.
Okay, so can you give us an example of that?
Sure. So let's say a new company was incorporated or set up on March 25th, 2022. So it may want to decide to set its first fiscal year end for the end of that month, so March 31st. And that way, the company could operate for about a year, and then its first tax return would need to be filed for the period ending on March 31st, 2023.
Right. And that's a perfect example of what we often see on productions. So in a case like this, I could imagine it could still be sometime during 2023 or maybe even early 2024 when the accounting team would say to the corporation something like, hey, we need a copy of your 2023 corporate documents. But the corporation might get confused by this because they're still thinking in terms of the calendar year of 2023.
Right. So going back to our example, and why this can be a confusing request is that someone with a loan out whose fiscal year end is March 31st, 2023 might be thinking, how can I have my 2023 tax documents already available when the year isn't even over yet? I haven't even filed my taxes for this year. But what the production's actually asking for are the corporate documents and the tax documents related to the fiscal year that ended on March 31st, 2023. So a loan out that has its fiscal year end on that date, most of the fiscal period for that year will actually occurred in the prior calendar year, meaning 2022. So that's where the confusion is. If they're saying your 2023 tax documents, it actually means the tax documents related to the end of that fiscal period in 2023. And so as we'll discuss later on, Sarah, depending on when a loan out gets hired on a production compared to when its fiscal year end is, it's going to need to provide a different year's set of corporate documents. So either it's 2023 documents, or if those are not available, the prior year, meaning 2022. So we'll see how that works in just a little bit. And now that I've talked a bit about the timing, the requirement to file a corporate tax return every year, just like you file a personal tax return, let's shift gears a bit. And we'll talk about why it matters to a production that a loan out is always up to date with its tax filing. So meaning it needs to file these returns every year. It can't miss a year or fall behind. So that's a really important topic to discuss that we'll do
Yeah,
next.
that's a great point. And, actually, one of the reasons that Canada does have such a vibrant film and television production industry is, of course, because of the tax credits. And productions can claim tax credits on the payments that they make to loan out corporations. However, they can also lose those tax credits if the loan out corporation is not up to date and compliant with its tax filing requirements. So I think it's fair to say that most productions would not be willing to take that risk. So if the production is not able to verify that a company has filed its tax return, they may choose to pay that person directly as an employee. And, it's important to note that it is entirely within the production's right to decline a person's request to be paid as a corporation and to pay them as an employee instead. But of course, if someone set up a loan out corporation, it's because they want to be paid through it. So to make sure that happens, they just have to ensure that they're filing their corporate tax return each year in a timely manner and then provide the production with the documentation to show that.
So let's talk a little bit about what that documentation actually is. We talked a little bit about the corporate documents. What else does a loan out need to be thinking about providing on a production for tax credit purposes?
Yeah. So when any company files its T2 corporate income tax return in Canada, CRA will assess the return and then they'll issue a corporate notice of assessment. And this is the document that's essentially proof that the company has filed its tax return. So this is what it needs to provide to the production. And then, of course, in addition to verifying that the company's filed its tax return, the production will also need to see a document that shows the company's current share ownership structure. And that's what we talked about before with the share register. But the document that's typically been used to show share ownership on productions is the Schedule 50. Now, unlike this notice assessment, which CRA issues to the corporation, the Schedule 50 is a document that the corporation itself or its accountant prepares and then submits to CRA as part of its tax return. So as soon as the corporation has filed its tax return, they should have a copy of this document because it's one of the documents that was required to be included with the tax return. So the point is that they should have this even before the notice of assessment is available. But like we mentioned, instead of providing a Schedule 50 every year, corporations can simply provide a copy of their corporate shareholder register or the securities register in BC. And then this one document will satisfy that requirement for all years.
So that's the nuance with BC, which we covered earlier. And to just recap at this point, once a loan out has filed at least its first tax return, that loan out now needs to be able to provide their current notice of assessment to show that they've filed their current year's taxes. And number two, they need to confirm share ownership. And as we now know, this can be done in various ways. If it's a brand new company, it's a share register. If it's a BC company, it's a central securities register. And if it's no longer a brand new company and it has a Schedule 50, which it attached to its first tax return, it would be one of those three documents, right?
Yeah, that's right.
Okay, great. So Now that we've gone through both the corporate and tax documents required for productions and for tax credit purposes, let's go back to talking about brand new incorporated companies. So companies who haven't reached that first fiscal year and they haven't filed their taxes. Let's go back and just revisit some of the requirements for those brand new companies.
Yeah, that's a good point because productions will make an exception for new companies who have not filed their first tax return yet. So this is the only time that it's acceptable for a company not to have a corporate notice of assessment. And, to see how this works, we can look at a timeline for a new corporation. So for simplicity, let's just imagine that this company was incorporated on January 1st, 2022. And then as we discussed, at the point of incorporation, every company is required to create its formation documents, which would include its corporate shareholder register. So every newly formed corporation should have this document available to provide to productions from day one. Then following that, the corporation can begin operating for a period, like we said, of up to 53 weeks before it would reach its first fiscal year end. And so in this case, let's assume the corporation waited a year and set its first fiscal year end at December 31st, 2022. So a year goes by, it's now December 31st, 2022. The company will have reached its first fiscal year end, but they still won't have these documents available because corporations have 6 months after their year end to file their annual tax return. So this company's tax return would not actually be due to be filed until June 30th, 2023. So they can always file earlier, but let's just assume that they waited right up until the deadline to file. And either way, no matter what, by the time we reach June 30th, 2023, we would definitely expect that this company would have filed its first tax return. So at this point, the company should have a copy of the Schedule 50 that was filed with that return. However, they're still not going to have a notice of assessment yet because they still have to wait for CRA to assess the return and then issue the notice. And CRA's queue and processing time for corporate tax returns is typically somewhere in the range of 2 to 4 months. So for this company, if they filed their tax return at the end of June, they would probably not receive their notice of assessment till sometime around September or October of 2023.
Okay, so we take this timeline. It looks like for a brand new company, there's a period that could be up to about 22 months before the first notice of assessment becomes available. Is that right?
Yeah, that's right. And so during that period, the company would need to provide to production its articles of incorporation and then also its shareholder register, or once the Schedule 50 becomes available, that could be provided. And then in addition to that, since this company cannot provide a corporate tax notice of assessment, most productions would ask the service provider, so the person working through the loan out company, to provide a copy of their personal notice of assessment from their T1 tax return.
Okay, so the individual's notice of assessment in place of the corporate one, because that one's not yet available for this brand new company within that first 22 months or so of being set up. Right. So that makes sense. And we know that in most cases these days, and especially production workers are now starting to submit their documents through our EP residency portal, which is designed to handle a lot of the requirements for either new and existing loan out corporations. So the good news is that although this might sound a little bit tricky and confusing, and with the timelines and the various documents, especially with this, proving your share ownership, EP residency does help take some of the guesswork out of what to provide and when. So Sarah, why don't we take a closer look at how that works? Because I think that'll be really helpful to show exactly how these documents get uploaded, where and when, and how EP residency guides us through that process in what to do depending on the time of year and the corporation's fiscal year end and when it's being hired on production.
Right. So I'll just share my screen now. So when a corporation is completing their project submission in EP residency, there will be an extra step for them to provide their loan out documents. And as you can see, I'm in that step right now. And the first document that I'm being asked to provide is my corporate notice of assessment. So if I already had this document uploaded and saved to my account, it would automatically be attached here for me already. But in this case, I've not uploaded anything yet. So to add the document, I will just click the button and follow the steps. So for this example, let's assume that my company has a fiscal year end date of August 31st. And as I'm doing this, it's currently September 2023. So let's say I found a previous notice of assessment for my August 31st, 2021 tax year end and tried to upload it here. Let's see what happens. So I will enter the date of the notice of assessment. And as you can see, once I enter the date, I'm getting an error message that says the document date is outside the acceptable range to be used as valid backup for this project. And I'm being instructed to provide a newer document.
Okay, right. So that's because it's currently September 2023. And if the company's fiscal year ends August 31st, then the most recent year's tax return would be, it wouldn't be for 2023, but it would be for 2022. So it's because you entered 2021 in the date box that it gave you the error message.
Exactly. Yeah. So in this case, my return for August 31st, 2023 wouldn't be filed yet, but my return for August 31st, 2022 would have been due to be filed like February 28th, 2023. And then from that point, I would have expected to receive my notice of assessment from CRA within a few months. So maybe by May or June at the latest. So now, since it's September, I should definitely have my 2022 corporate notice of assessment by now. And so that's what would be considered my most recent available assessment and the one that is required in this step. So that's why my notice of assessment from 2021 is no longer acceptable.
Okay, that makes sense.
Mm-hmm. So now let's imagine that my company still has an August 31st year end, but that I'm a newly incorporated company and that the August 31st, 2023 year end that just passed was my very first tax year end. Obviously, since it's only September, I would not be expected to have filed my first tax return yet. And even if I had, I would definitely not have received a notice of assessment yet. In this case, when I get to step, you can see that there's an instruction that says, if your company is newly incorporated, use the box below to indicate that if you've not received your first corporate notice of assessment yet. So I would check off this box, and then you can see it's asking me to fill in the date of incorporation. So let's assume that I had incorporated on August 26th, 2022. I would enter that date in the field. And then it's just checking that my company is in fact a new company. And then all corporations are required to answer a couple of questions. And then as we scroll down, you can see that I'm required to provide a document showing my company's share ownership structure, which, as we discussed, could either be the Schedule 50 or the shareholder register, which again, all corporations should have. And so in this case, I had already uploaded my shareholder register when I set up my incorporation. I had uploaded it to my account, so you can see it's attached there automatically for me. And I'd also already uploaded my articles or certificate of incorporation, so those are also attached there for me automatically. And since I indicated that I have a new incorporation, the articles are required to be attached so that the production can verify the incorporation date.
Okay, so you only have to do that once, really, once you set up your loan out in residency.
That's correct. Once you have uploaded it once, it will automatically attach to all future projects.
Right.
And then as we discussed, the exemption for new companies based on that timeline should only be for a period of about 22 months. But in the EP residency system, we do provide a small cushion and we set the cutoff at 24 months. So that allows for, slightly late filings or CRA delays. But beyond that point, there are no further exceptions. All companies are required to provide their current corporate notice of assessment in order to complete this step.
Okay, that makes sense. Thanks, Sarah. So what happens if the box is checked off with an earlier date?
Right. So if I made a mistake when I was filling this out, or I tried to enter a date that was older than 2 years, you can see that I'm going to get an error message here, and I'm going to have to resolve that before I can proceed. Okay, so I'll stop sharing now. But as you can see, using EP residency definitely helps to guide corporations as to what documents to provide and prevents them from uploading something that's not acceptable, which makes completing their submissions much more straightforward. And this is really helpful because since companies all have different fiscal year end dates, and then there's this period of time for filing and receiving the assessment, it can sometimes get confusing as to which documents are acceptable or not at different times in the year. So Jennifer, maybe we could walk through some examples of this right now.
Yeah, sure. So for these examples, let's consider a fictional crew member, John Smith, and he's a set dresser who's working through his loan out, JS Sets Inc. His company's fiscal year end is October 31st. So in this first example, John is hired on a new production on November 2nd, 2023. And as part of the onboarding process, he's being asked to provide his corporation's most recent notice of assessment and Schedule 50. So if he tries to provide his documents from his company's October 31st, 2021 year end, these documents were most likely prepared and received in 2022, then the production won't accept them. These documents are already now too old to be used as valid corporate backup on any current projects now that we're at the end of 2023. So if he was using EP residency, he'd get that error message that came up that we saw earlier.
Yeah, that's right. And here's why. So since it's November, we've just passed his October 31st, 2023 year end, just days earlier. So he wouldn't be expected to have any documents from that tax return yet. So then we need to look to the prior year. The tax return for his October 31st, 2022 year end would have been due to be filed by April 30th, 2023 at the very latest. So
Right.
now that it's November, he would certainly be expected to have not only filed his tax return, but also received back the assessment for it. So in November 2023, this would be his most recent tax return that he needs to provide his documents for to the production. But if we look at another example, like let's assume that it's actually a few months earlier and the same production worker, John, is hired on another production in, say, July of 2023. As part of his onboarding process, he'll again be asked to provide his corporation's most recent notice of assessment and Schedule 50. But in this case, though,
Right.
if he tries to provide his company's documents from his October 31st, 2021 year end, those documents will still be acceptable.
Right. So in this example, the 2021 documents are still valid because if John only filed his October 31st, 2022 tax return by the deadline of April 30th, 2023, which is 6 months after his October year end, it's pretty possible that he may not have received that 2022 notice of assessment yet, now that we're in July of 2023. So in this example, it would be the 2021 documents that would be the most recent and be acceptable for a time period until his following year end, 2022 year end was filed and his notice of assessment for that year was received. So hopefully these two examples help explain when and why certain documents are acceptable and others are not, depending on the various fiscal year end and various production hiring dates. So now that we've covered that off, Sarah, can you talk about any other items that loanouts need to be aware of or other things that sometimes trip people up?
Yeah, for sure. So there are a few tips corporations should keep in mind to ensure that they're providing complete and acceptable documents to productions. So as we discussed, the production needs to be able to verify that the notice of assessment that the corporation provided was issued for its most recent tax year end. Unfortunately, the first page of the corporate notice of assessment doesn't actually show the tax year end. It only shows the date that the assessment was issued. And so sometimes corporations get confused by this and think that that's the date they should be looking at. But actually, of course, the production needs to verify the tax year end date, which is only shown on the subsequent pages. So if a corporation only provides page one, the production will not be able to verify that. So they need to make sure that they're also providing page two or other pages with their assessment so that the production can see the date of the tax year end that was being assessed.
Okay, so page 2 of the notice of assessment is really the most relevant page. And keep in mind, a lot of the information, it's obviously sensitive tax information, financial information can be blacked out and redacted.
Absolutely.
And yeah, and I think residency also helps or at least has reminders around that. And so what other issues do you see come up where loanouts can get mixed up on what documents to provide?
Yeah. So the other item that can be a bit confusing is that CRA actually issues a variety of assessments to corporations, and they all look fairly similar. So these include things like a sales tax assessment or payroll remittance assessments. However, none of these other documents are an acceptable document for tax credit purposes. So the document that productions require is the assessment for the corporation's income tax filing. And that's the only one, even though you might see something else that came to your corporation and says assessment, those are not the right document and the production is going to come back to you and ask you to replace it. So corporations need to make sure they're providing the right assessment upfront, and the easiest way to identify the corporate tax assessment is to look at the business number. So your tax assessment will be issued to the corporation's RC account, whereas the other assessments are going to be issued to another account such as RT or RP. And you can also look at the date. So the tax assessment will be issued for a tax year end date, whereas the other assessments will be for a different date or date range, such as period covered or tax year.
Okay, great. Thanks, Sarah. These are really helpful tips and tricks for people working through their loan outs. And we've covered off all our topics for today. So to conclude, let's do a short recap of everything that we covered and about what you need to know about setting up and working through a loan out company in Canada. So topics we covered and discussed today were first, setting up a new incorporation, the documents corporations need to prepare and have on hand, a loan out's fiscal year end as compared to a individual's personal tax year end, and the tax filing timeline for when you need to file a tax return as a corporation. We also covered the various corporate documents required by productions so that they can make accurate tax credit calculations. And finally, we looked at how EP residency can help loanouts upload and provide the correct documents to a production, whether they're a newly incorporated company or an existing company. So we hope all this information was useful to you, and we thank you for tuning in.